This episode is sponsored by City Traders Imperium. CTI is a prop trading firm looking for profitable Forex traders who need more capital. CTI will back its traders up to $2 million, which is the most in the industry, and thousands of traders worldwide are trading their capital remotely from their own home. It's the most flexible funding provider in the industry, where any strategy is welcome and overnight or weekend positions are allowed. Plus, CTI doubles your account every time you hit 10% net gain, which you can scale up to $2 million. Click the link in the description to find out why City Trader offer the best funded trader program in the industry, or visit citytradersimperium.com. Hey folks, Cam here from Trading Nut. Welcome to this video where I'm going to walk you through a hedge trading strategy that's got a 100% win rate, okay? And I'm going to tell you why in a second. It's got this 100% win rate. It's simply, let's just do it now. Let's jump into the message that I got. And what you're going to find out is you're going to find out the strategy. You're going to see how I've automated it into a trading robot. You're going to see how you can control it, the things I've added into it. And yeah, you're going to learn a thing or two about the pitfalls of trading with a hedging strategy, and also whether or not this stuff works. Okay, so look guys, let's jump into this Instagram message, and I'm going to keep his details private, but like, so you know, nothing against the guy that sent the message, and I'm sure he's going to watch this, so look, hey, it is what it is. Now what he says here is, hey Cam, I've been messing around with a 100% win rate strategy which requires no TA or FA to profit. Wow. Okay, so there's a couple of things in here that you really need to be aware of. So messing around are probably the two words that I'll be looking at most importantly. So if you're messing around, it's probably not 100% win rate because you haven't done the due diligence of testing every single permutation and combination. And that's what we're going to do here with this robot. It's going to go through and just bang it out and let us know, does this work or does it not work. Here he goes. As you can tell, it's a hedging strategy, and I'm wondering if you'd be interested in creating an EA based on this. Now look, I don't usually do this guys, but what I do is produce a robot a month for my robot lab, which is part of my robot builders club. So I'm going to give the strategy to this guy because I said, look, if I build it, I'll give you the strategy. Now if you guys do have strategies you want built and you want me to build it, well, there's a chance that I will, and it'll go on the YouTube channel like this. There's a chance it'll go on the YouTube channel. If it does, then what I'll do is I'll send you a copy of it free of charge. But for now, the only way to get access to these is be part of my Robot Builders Club, where I teach people how to build the robots that, like I do. It's no coding required, that sort of thing. So, guys, let's jump in and have a look at this strategy and see what the base sort of scenario is that we trade. So this guy thankfully sent me this image which shows us how it works. Basically, you get your first trade and you put it in at a lot size. This case it's 0.01 lots, and if that doesn't reach the take profit a certain number of pips away, we add a sell trade. Okay, so that's a buy, we add a sell trade, we double the lot size. Okay, so if that hits take profit, we're only sacrificing that gap in the middle there from the buy trade, and we've got a double size for the sell trade. And if that doesn't take profit either, then we jump back into this side, we double again, and so on and so forth, and we keep doubling until either we take profit and we close everything out, or we don't enter another trade and we take profit here, close everything out, and unfortunately lose quite a bit of money, because we now, like, the last trade is going to be double that, and you've got all these losses here, so you're going to lose, you know, it's going to make a dent in your account, put it that way. All right, so that's the thing that you probably don't hear when you're doing this, but you can definitely see it in the charts when I show you. Okay, let's jump over to the charts and have a look and see how this looks in the market, and then also see what I've done to make this strategy slightly different, give ourselves a bit of an edge to see if we can try and make it work a bit harder. Okay, so let's jump over there now. Right, let's try and whip through these settings and see, show you guys how it works. Then we'll jump into some back tests and see what they look like as well. And so how this thing performs, right? Okay, so start off with, here we go. These are the settings. So I've broken it down into strategies. You've got some settings here around time and time frame. Then you've got the strategies you want to trade. I've done two. So the one, this one here is a range strategy. The other one is a moving average touch. This is getting us into the trade. This gives us our edge from the way I see it anyway. Now the hedge management, so you've got three options here. You can either have an aggressive hedge, 9 trades, 6 trades, or 3 trades. So less aggressive down here. Take profit is fixed at a number of pips, so 15 in this case. Your initial lot size, very important. So if that's high, then you're doubling that with the initial lot multiplier. So the second trade on this one would be 0.2, and then your third would be 0.4, 0.8, so on and so forth. So it's doubling every single time. Now the unique thing with this is you can flip it around so that you can go reverse. You could have a higher initial lot size and then divide that by 0.5 or something like that for every subsequent trade. So that means if you win more often on the first trade, then you're going to get a bigger return, but it's going to reduce some of those losses as well. So yeah, so that would give you on your second trade 0.5 lots. It will give you on your third trade 0.25 lots and 0.125 lots if you can go that low. So it would go opposite basically. So the other one is break even minimum trade count. Right, so what does this mean? It means when you've got 2 trades running, it's going to set a break-even exit of a dollar amount or a euro amount or a pound amount or whatever it is. So in this case, it's $1.50. So as soon as we've got 2 trades running, which means our hedge is starting to kick in, you might want to get out of that hedge as soon as possible. So as soon as we get any profit, you just put that amount of profit there that you want to get out, and bang, you're out. Okay, so I've added a few things to this particular strategy just to make it a little bit more robust in my view anyway. So we're going to have a look at how the range and the MA touch or moving average touch work. Okay, so let's jump in the chart and check that out. Okay, let's jump into the moving average touch strategy. So I've turned that to true. I've got the EMA set at 50. I've got the EMA buffer pips at 10 and the entry range size pips at 15. What do those two things at the end there mean? I'll show you exactly. So the buffer and the range, it's all you need to remember. So this is what it does. It says, right, we need to be a certain distance from the moving average before we'll accept a touch of that moving average. Okay, so in this case, let's just draw on the chart here. We're looking for 10 pips, I believe, to be the distance. So we're wanting this to be 10 pips away from the moving average before we say, okay, we're happy to take a touch of that moving average, at which point it does here. And then we set our penny orders. So these penny orders are above and below that moving average. And the distance of this is 15 pips. Okay, so I set it to be 15 pips. So that's 15 pips. And we're now going to wait for our trade to get triggered. So we touch there and the trade gets triggered just above that there. And we go straight in for a buy, and there's no hedge on this one. We're waiting for the hedge here and it doesn't trigger. Okay, so as soon as that one triggers though, we delete the initial penny order here. We set a new penny order up with double the lot size, okay, or whatever our multiple is. So you can see that kick in here. So what we've done, and I'll show you how this works from a lot size point of view, because that's probably really what you want to see around the hedging. So the first trade here is 0.1, okay, so it's 0.1 at the top and the bottom, 0.1. Then the sell trade gets triggered, so we're in for a sell on 0.1. Then it creates another trade, a penny order here for 0.2. So this is it here, 0.2. And so now we get triggered into the buy. We set the penny order down here for 0.4. And that would be our hedge that gets deleted as soon as we take profit, okay? So that's what we're doing, 0.1, 0.1, then we take the 0.2, double that, 0.4, it doesn't get triggered, we delete that penny order, we exit at profit. Now the 0.2 is going to be more than the 0.1 here, as long as your range in the middle is smaller than your take profit target, okay? So that's how it works for the moving average. Now the range strategy, let me just run a test and I'll jump back in here and show you how that works. Alright, so this is our range strategy, guys. So what we're looking at is two things. We're counting a number of candles back to get our range. In this case, it's about 10, which I think that's about 10 candles back. And then we're also looking at the size of the, from the high to the low of that period of candles. We want that to be within 10 pips, okay? So 10 pips. If we can get that, which it is in this case, then we set our penny orders a certain range apart. So in this case, it's 10 pips apart, so these are set 10 pips apart as well. So what we're doing now is waiting at the end of that range for one of these to be triggered. It triggers the sell and takes profit straight away, so we don't use our hedge, okay, in this case. Now we can probably show you a better example where we do use our hedge coming up in a second. Let me see if I can find one for you. Here we go. This one is a great example of where the hedge is kicking in. So we've got our range, we enter our penny orders here, we get triggered to buy, then we get triggered to sell, then we get triggered again to buy, then we get triggered to sell, then we get triggered to buy. This gives us a profit. Now, if we had not had a profit on that last buy and we went to trigger the sell and there was no sell to trigger because we haven't put a penny order there, then we would end up with a loss. Okay, so that's how it works, guys. Let's jump in and check out some of the test results, then I can tell you how you can get a copy of this. Okay, let's jump in and have a look at some of these test results. Right, so I've done pretty much the same test, but I've just changed the number of hedging trades that we're doing. So this one has 9. This is the most aggressive. You can see here that it does okay. You know, there are periods of time where it does really well, but it's that one trade where the hedge runs out of money that you get absolutely slammed, okay? And it doesn't really, I mean, it gets what? It gets up to 20, about 15% on the account, but yeah, you get slammed, and then it sort of steps down. It just can't sustain it. I mean, that's probably about a 7-month period there, 6-7 month period that it's retained its profitability. So if you only traded during that 6 or 7 months, you'd be going, this strategy's great, it never loses, when in actual fact, it does lose now and again if you keep doing it, right? So this is the 6 trade option. You can see here that we've once again got about a 6 month, 7 month, I think this is period of time where we don't really lose. We don't really lose. We're constantly growing, okay? Not massive growth, but we're growing. Then here is this is the 3 trade strategy. Now something's obviously gone wrong here, so this big spike shouldn't happen. I think there's a little bug in the robot. It doesn't look like it happens again, so it might just be an anomaly I need to look into. But you can see here, these are some of the test results, guys. A lot of trades because we're placing a number of trades at each time. So this is what it looks like over time. So your 100% win rate strategy isn't really 100% using these particular methods. So this is using the range strategy, but you could use the MA touch and get different results and a whole bunch of other things, right? So this is what I teach in my Robot Builders Club. So thinking, how do I get my hands on this? Well, look there, this is my Robot Builders Club. I give this away, well, I'm giving this away this October. If you join up to as a new member of my club, you get it as part of the Robot Lab, where you're going to get access to like 20 more robots. I teach you how to build my trading robots using this thing called FX Streamer. It's a drag and drop editor. There's actually a video on this page here that walks you through the club, the drag and drop editor. You can do the whole thing in 7 days, going from not knowing how to build trading robots to building trading robots like me, like a pro, in minutes or hours. It's literally that fast. Okay, folks, yeah, if you want to take part in this, you want to join up to the club, then all you need to do is check out this page. There's a link below the video here, and then see if it's for you. See if it's the right thing for you. See if you want to learn how to build trading robots that either fully automate or semi-automate some of what you do. There's a couple of bonuses in here as well. You get access to my full 52 traders library, which is not available to the public. And so it's a whole bunch of podcasts where I interview traders from all around the world, like Trading Nut, but even more. There's also my Trading Mentors Match-Off series. My first course I did as well, you get access to that and a whole bunch of other things I'm always adding to this. There's live Q&As as well, so if you want to come along to those, have a chat to me one-on-one, then this is your chance. Alright guys, do remember, subscribe to the videos. We've got more of these coming up. We've got more fantastic traders coming up on the show with the live streams, Trader vs Trader, Trading View Replay Challenge, and Scalper versus Scalper. So guys, all here on the Trading Nut YouTube. Do remember, subscribe, like the video, and then I'll see you in the next one if you click all and the notifications bell. Alright guys, see you then. Bye.